All right. Welcome everybody. I'm Jay Frank with EXP and the Jay Frank Group. I'm here with today Robert Schneider, and we are going to do a series called Market Talk, where we come on maybe once or twice a month and kind of give you an update of what we're seeing as a realtor perspective and also as a loan officer mortgage perspective. So obviously, you guys, today in today's market, it's a little bit a little crazy, a lot of unknowns what's going on. But yeah, we want to kind of give you what we're seeing, our perspective, and where do we kind of go from here. Bob, would you like to introduce yourself?
Sure. Thanks for having me, Jay. I am Bob Snyder, or Bob the Broker. I am with Silex Financial. We're a small broker shop in Hawthorne, New Jersey, and been in the business about 18 years and find this market very fascinating, I'll tell you.
That is for sure. It is fascinating, especially where we come like 6 months ago to now. I mean, it's night and day.
It is. It's
And I
crazy.
It is crazy. It's night and day, and I think a lot of people are kind of just in shock right now as well. But Bob, can you give your perspective on what you're seeing on the loan and mortgage side,
Sure.
today and moving forward, what you think?
Well, I think look, I'm not always right with these things, but I think that we saw the peaks of the mortgage rates. They did hit about a month ago. They were in the low sevens, but we're starting to see them come down. I think that the fear of inflation is starting to come down, and with that, we're starting to see some lower mortgage rates. Yeah, low sixes. Now look, sixes are manageable. If you look at the history of rates, 30-year fixed rates in the sixes are pretty average. So we just got a little spoiled over the last couple of years. I think personally that we'll see some low sixes, and maybe even next year we'll see some low to mid fives.
Mm.
In which case that's a manageable rate. What I think is just very interesting is typically with the higher rates, we see values start to come down, but not really so much in New Jersey. What are you seeing on that?
Yeah, I agree with you. I think New Jersey is its own animal in regards to the real estate market compared to anywhere else in the country,
Yeah.
or I would say the Northeast pocket. New Jersey is a place, obviously, I mean, you could live on one street where all the homes are valued around 500,000, and you go to the next street over and you're at 1.2, 1.4. So, it's a hard market to kind of target and say this is exactly what's going to happen. Especially, what I'm seeing in real estate in our market, in different markets in New Jersey right now, is also that maybe it's not like 6 months ago where people are offering $100,000 over asking, but
Hmm.
there are still homes on the market, in certain locations when they're priced right and marketed right, where we're still seeing multiple offer situations. We might not just see astronomical over asking these days, but the demand, in my opinion, is still there. um
Yeah, I agree. I'm still seeing some multiple offers, but I am seeing some borrowers who are FHA approved who are just having trouble getting anything,
mhm.
finding some homes. So it is easing a little bit.
Yeah. It is easing a little bit, and I hope that window kind of eases a little bit more in the sense to give some more FHA buyers an opportunity to even, get in the game in regards to, getting a house.
Yeah.
Um, because 6 months ago that wasn't even the case. We
No.
were dealing with conventional and cash. Those were the two categories that we were picking from.
Even conventional 5% down people were having a real hard time, getting in the game there. So
Yep.
yeah, the FHA borrowers, I was kind of telling them, look, you're gonna have a hard time unless you really overbid.
Right. And yeah, so the real estate market, like I said, is interesting. I think we're seeing also two things right now in the market of, yes, are we seeing a slowdown? Yes. And the two things that I believe that are causing them, obviously the interest rates and also seasonality. I think we're seeing a little bit of transition because of the seasons. People are kind of wrapping up, or maybe just they're going to start putting their homes back on the market right after the holiday. But like I said a couple of seconds ago, that the demand is still there.
Yeah.
It is there. There's people that want to get in houses, and the inventory really isn't there as well.
That's what's so interesting about it, right? So I have a backlog of people who really want to buy, who either couldn't find anything, couldn't win in these bidding wars, or kind of gave up for a little bit, and now they want to come back in regardless of rate.
Right.
But there's no inventory.
Yeah. It's it is crazy in regards to like if you look back 6 months ago, the only things that have changed are obviously interest rates and seasonality. And those are two things that are affecting the industry right now. And the thing is too, that, this market has, the world has completely changed in regards to also infrastructure of companies. COVID, when COVID hit, it really forced the hand of large organizations to build the infrastructure to have like work from home options. So that also branched and pushed people, somewhat western parts of New Jersey as well. So, so there's really, depending on the industry and what, if some of the organizations are pulling back and having their employees come in, then we could see that pull back closer to the, the northern, the eastern seaboard, a little bit closer east in New Jersey. But I also think that there are some companies out there that are going to keep the infrastructure they built. And the reason why that is that now they're able to capture more talent when they have a little bit more work from home and they've built that infrastructure. So I think things might start to go peel back to, maybe a little bit similar to where they were prior to COVID. But I also think COVID changed the landscape of companies and industries, and also acquiring talent and where people live and having the infrastructure to, live in a little further out west in the Northeast as well. So,
but what's interesting about that though is there's still an inventory issue. So we've opened up and expanded to Western Jersey, so there should be more homes for the buying pool. Yet there's still inventory issues, right? So
there is, yeah.
Shows you how many buyers there are out there.
It is, especially, there's only so much land in New Jersey as well. So in regards to that, we could see, a push even further west when we get into, Scranton or Stroudsburg or Easton, or, so these Pennsylvania towns could start to see, they're already, booming already now, but we could see another push, out there. Because, we have the Highlands Act in the northern western part of New Jersey. So there's not, developers can't necessarily come in and just, build these huge communities. It's not like that as well. So there's a lot of factors going on. But good.
I would say, so you get calls from clients. What are you advising them?
It really depends. It's on a case by case basis. What their situation is with anything. There's no, there's no cookie cutter answer to anybody's situation. So it's really taking everything into consideration and then figuring out what the strategy is there. If a client is, eager to buy and they can buy, I would say I would buy right now, because and the reason is because if the interest rates, when the interest rates start to tick down a little bit, I believe that people are going to be knocking on the doors and trying to get in multiple offer situations again, with, prices probably going over asking. So sometimes if you can, I would say take advantage of the lull that we potentially have going on right now, because as soon as that kind of shock and awe wears off, and the interest rates come down a little bit, it could be a little bit more, chaotic again.
So what you're saying is that we could see next year in 2023, values continue to grow. So those people who bought this year, even now, I think the big fear is I buy now, and what happens if values collapse? That's what everyone in the media is talking about. But in New Jersey, I haven't seen it. So we could see someone who buys now who's all of a sudden next year have $20,000, $30,000 more equity just because they bought in November, December, rather than waiting.
I agree. I do not see home prices depreciating that much. And also, if you do lose, say they do depreciate. I mean, obviously, Bob and I can't predict the future, and if we did, we'd be somewhere else right now. Our backgrounds would be different,
That'd be
maybe
great.
palm trees.
Mhm.
But even, I mean, I don't see them depreciating that much, if any, especially in New Jersey. But even if they did, if like maybe 1 to 2% depreciation,
Yeah.
maybe. Like that is like I'd be reaching at that point. I do see a slow appreciation value. Maybe it'll slow down a little bit, but anyway, the thing is majority of the time, home buyers aren't buying a house for 1 year or 2 years. You're gonna ride this out for at least 7, to 10 years on the average. You're gonna live in that house, depending on how big the house is and whether or not you're going to have to, upsize, in that period of time, or you're just going to stay there for a longer period of time. So no matter what, I still think it's a good time to make the purchase, because even if it does depreciate a little bit by next year, which I'm surprised if it would, you're going to ride out that storm and make more money in the
You're
long
not selling
run.
next year,
Yeah. Yeah. You're
right?
not selling it. Long story short, you're not selling it next year.
Yeah. You know what? I've been stressing with my clients to make sure you buy with a comfortable monthly payment, comfortable price range and monthly payment,
Hmm.
so that don't worry about the rate so much as the payment. At some point
Yeah.
down the road, there's a good chance you'll be able to refinance into a lower rate anyway. You don't want to
Hmm.
bank on that, but you probably will. And like you said, is with with a bit of a lull, you might find the perfect house and not as many, not as much competition.
Right. Right. Um, and a lot of times it's, people make their most money when they do the opposite what everyone else is doing, right? If you A lot of times following the crowd necessarily always isn't a good thing. A lot of times you're gonna need to step back and analyze the whole situation, because a lot of the people who are reacting right now is because they only see exactly what's in front of them. They're not looking at the big picture or the long play. They're buying a house in a 1 month period compared to buying a house on a 30-year fixed loan
Right.
period. So, and, you know, but yeah, I mean, and people say like, oh, is this 07, 08 again? And I'm like, I don't see that. I don't see that at all. I would say the big difference from then to now is that people who are approved for more, for mortgages are highly vetted. Their financials are extremely strong. Maybe back then in 07, 08, all you needed was a heartbeat to get $1 million mortgage. That's not the case anymore. So
People weren't
what's
buying
your
for
opinion
their
on that?
means. They were overbuying, expecting that at some point they could afford it. I'll get a raise
Mhm.
in a couple of years. They were 100% financing, all kinds of crazy stuff, and there was a lot more out there. I mean, I agree with you. I think that this is very different than back then. And the foreclosure numbers have not risen. Yeah, so they're pretty low. I don't see that.
Right. I think, will there be some foreclosures? Yes. Okay. In any market, there's going to be,
Sure.
foreclosures depending on individuals, situations. But I don't, if there's a foreclosure, if foreclosures are out there, they will be. I don't think it's because of the depreciation of the property value by any means, by being a
Um,
huge major factor.
if you want to discuss a possibility of a recession where people lose jobs, and then therefore can't afford their payments, I mean that's a whole different discussion.
Right.
Yeah, you can't not buy now if you just because you think, well, maybe a couple of years from now there might be a recession. I could lose my job. I mean, if you feel like you're going to lose your job soon, that's a whole different story. But that's
Right.
just that's just a tough play.
It is. No one can predict the future. All we can do is, look at what information we have in front of us, what we're, projecting, what we're seeing, what people are saying, and and kind of where we came from, and potentially where we're going. So, Bob, is there anything else you would like to add in this month's market talk?
No, I think that like I said, be safe with the numbers. Make sure you're buying within your means, and I think it's a great time.
Great. Again, anybody who has any questions or wants to reach out to us, please, feel free. Any question. There's no such thing as a stupid question. And we're here to help you in any way we can. So thanks for joining us. And we'll look forward to, anytime. And you'll see us soon, very soon.
All right.
Take care.
Bye, everyone.